The number one requested trading topic for SMB to teach is reading the tape. Here's another reading the tape video for you from us. What's special about this video is that this coaching session on reading the tape features our top trader on the desk. But when he was just starting with us as a trader, see what he was learning, see what his thought process was, and compare it to your personal trading development. This is an SMB classic where you watch how a present-day seven-figure trader developed his reading the tape skills when he was just starting. And do so in this live coaching session with him and me. If you want to improve your reading the tape skills, this video surely will help. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. Well, in this video, you're going to improve your reading the tape skills. And you're also going to learn how we coach the seven-figure trader presently to improve his reading the tape skills when he was just starting. How to use the overall market as information to trade a stock and play. How to find key levels intraday from reading the tape. How to use the tape to spot the next most likely direction of a stock and play. And as always, the biggest reward for all of these videos is how to think through a trade like a professional trader. For those of you who want to improve your trading so you grow your trading account, we hope this video helps. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
I'm going to share a trade from Citigroup today on the open. Can we bring up a 10-day chart maybe of Citi? I guess the intraday fundamentals, there wasn't any unexpected news in the stock. It was just more of the market was in play.
But that's a big thing though, right? Which is overall we came in and we gapped down 2.5%, right?
And you know, I look for
and this is one of the market stocks you're trading, right?
Exactly. This is the one that I've been trading the last few weeks, have had success with. I understand the way it moves more. I like trading things with tight spreads, so this is kind of the thing that I go to.
And this has been moving pretty well with the market, right? I mean, when we're trading, we've been saying that when the market is moving so much intraday, that you want to trade the ETFs or you want to trade market stocks, and this is one of your market stocks that you're going to, right?
Right. So, you know, I was trading over in these days, and I knew that this 2850 you can see from these wicks, you know, pretty important level. You know, below there, I thought 28 was a little bit of a level pre-market one of these days. But I was really looking at this 2850 level, and it just happened to set up pretty perfectly right in the open for an opening drive play. So I guess we can get that back.
All right, so we're going to watch the tape of this?
Yeah. And you know, it was pretty much don't ask for anything better than this. I'm actually pretty upset with you know, how little I made, even though I made it.
Okay, let's talk about that. So this is the idea for this is we're waiting for it to get below the 2850, right?
Right.
And are you looking for the market to be weak as well with that? First of all.
Yeah, I'm looking at the market. If it's below, you know, 117 and going down the open, definitely want to be aggressively short stocks.
What time is this?
This is 9:32. I was looking at NTEP as my primary stock, but I have Citi just I'm looking at this one particular level. And you'll see I flip over to it.
All right, so we're right at that level. You can see the spies up here. Opening up, starting to tick a little bit down, right?
So should be getting that. It's pretty short here.
That 116.40 was really the level, though, right? We were kind of going up and above and below that 116.50, right? And then we wanted to actually take it. It kind of went above it, went below it, and then it actually came down and it held 116.40 for the first time on the spiders.
And you know, my problem here is really my mind state. Instead of, I should be thinking, get bigger, get bigger, get bigger, go under the level. I'm kind of thinking about
Are you short
cutting my risk. I'm short.
That's it.
Yeah.
All right. So to me, that was and just stop the tape here. Like to me, the trade is this. You stop the tape. So to me, the trade is we've got a market that's very much in play. We've got a market that's very much in play. This is a market play. All right. This is not a stock in play. And we open, and you want to watch what happens, whether the market is going up or down right on the open, and you want to actually play the momentum because we're down so much. The market can go up or can go down from these levels. And so what happened was 116.50 became right on the open an inflection point. And so when you have a price in Citi at 28.50, and when you have an inflection point in the market at 116.50, to me the play is, can I see the spiders hold below 116.40? And can I see Citigroup hold below 28.50? And if I can see that, then I want to play for a drive to the downside, right?
Right.
So that's what I'm looking for. And you're right. I think that this is one of those times, on the morning was one of those times where you actually wanted to take on more risk. It was a little bit whippy in the spiders right on the open. I think we got below it once, and some of us got short, and we went above the level, and then maybe some of us got long and went below the level. It was a tiny bit whippy, but because we were down so much, because we said this on Monday, right? The quiet before the storm. And it was in a row where we didn't really do anything, and it just felt wrong.
Yeah.
And even actually last night, if you were reading the commentary, it was like, oh, to the summer, we're actually going to go up, and it's not going to be until after Labor Day before a lot of people are interested, and we'll have a new sell-off. And too many people started saying that. And I just, from a trading perspective, it just didn't feel right. It was just, there was so much negativity, and we came back 10%. So, G-Man did a really nice job this morning talking about look for the weakness. And, we've talked about this before, that we want to actually look for the sharp down moves. And if we start to see that, then let's trade from the short side. So this was a different day than it's Friday, right? Completely different start.
Much more volatility in the pre-market,
yeah.
too, which is close.
Yeah, so your job in a market like this is what? Like, what's Peter, what's the theme on a day like today?
You want to make a lot of trades and go with the short-term momentum.
They definitely want to trade with the short-term momentum. Excellent. Greg, what else?
You want to follow the trend of the overall market.
Okay. I don't think that's right. I think Peter as intraday traders, we want to follow the short-term momentum. So wherever the last battle was, where's the next move, up or down? All right. What else? What are we thinking about? Yes.
Bigger.
Yeah. That's the idea. Is that this is one of those days where your job is to be as big as you possibly can, such that we don't fire you, and such that you are responsibly short in this case. How big can you be and be responsibly short? And if you're not big enough, you're not doing your job. If you could have been shorter on a day like today, you're not doing your job.
To be honest, you'll see in this tape there's about 4 very clear spots to add, and I do, add during the trade, but I should have been. I started with 800 shares. I should have been adding 1,200, 1,600, 2,000. and I only get up to like 1,000, and it's already into the move. So, I'll point that out as it goes. How do I play this? All right, so it's going down, and what you'll see is it just really can't get above 35 cents. So, I eventually have, but.
So you're thinking, should I lighten up?
Yeah, that's what I'm thinking instead of. I lighten up, but I get back into pretty much what I had.
Yeah, I think as long as we're below this 1650.
I think I saw that little spike up in the spice, and I'm playing more like the spice as city.
So as long as the spies are below 1650 or not holding above 1650, you did lighten up, didn't you?
Yeah, so I think I just added another couple hundred shares. Kind of like at 1 tier right now.
It's not terrible to lighten up. I mean, it's not like we moved that far away from 11650. It's the first move. So if you want to lighten up, it's fine. You just got to get back in.
Yep. And now you'll see one spot where I really do miss the ad. Here's same thing kind of happens at 15 cents. It just can't get above 15 cents. And it's pretty much should be, like 400 shares that I had right here.
What price?
Right, just anywhere right here, 13, 14, 12, against 15 cents. But you see I had my bid box in to cover instead.
Yeah, one of the things we're looking for is the bottom for the spiders. It would be easier if we were through the bottom of the spiders, holding below the bottom of that last down move, right? That would certainly give us a little bit more confidence that we should be shorter. But that was that actually that was a little bit weaker than the overall market.
And the financials have been the weakest sector overall for quite some time.
Right. Now we're starting to get towards the low of the day in the spiders.
That should be it.
To me, right there is where you got to get shorter. Right. So there's absolutely that 13 cents right there. There was like that one split second. You got to be shorter.
And then now you'll see this 28 I had as a level in my mind as far as city, although the market is showing a weakness and there's a lot of size on the bid, but it doesn't really uptick. So I do a good job of not covering any here. It doesn't get above 2 cents, and I actually add once this size is taken out.
So that's good. I like your mindset, which is how do I get shorter?
So now, I want it to speed up, and I'm looking to take covers into the down move. Any sort of quick, goes down too fast. That's kind of where I'm looking. I think I took out 200 shares at a cost. That should have been a hold though.
Alright,
Covered some there.
Yeah, that was a good cover there at 66.
Now I'm down to like 2/3 of a tier just because it's
Does
pretty.
everyone understand? So you can lighten up if it's too steep, and then you really do want to then offer up though, right? You lighten up. I thought that 66 was too steep. Maybe you want to try and offer up 80, 89 or something like that, and then hold your core. I think you're too light here though. I don't think this is
200 in that. That was really there's no reason.
this is like.
Overall, I should be still holding like 500 or 600 shares. Hasn't really shown any sign of strength at all. And the market just continuing to go down.
And this 2750 is a level, right?
I think this was a little bit of a level.
No, maybe I'm wrong with that. Maybe I was thinking of Morgan Stanley at 5050. I got confused.
But I've been trading the city the last couple weeks, and average 50 cents it seems to be level pretty much.
This is good. I mean, to me, my question for you is, where would you love the short? I mean, I'm definitely going to re-short into the 80s.
Right.
I got
the
question is, do you want to? Yeah. You're too light there. I mean, you should have been. You need a core here, right?
Yeah. I was thinking the market finally had put a green bar in for a few seconds there. It couldn't get below 50 cents, but I still should be holding a core like 300 shares. And now it's just getting like really steep to me. I got out there. Still should be holding some. It goes down another 30, 40 cents. but that's pretty much
All right, so look, that's the opening drive. Opening drive play that was the specific opening drive play, which is stocks below level, markets below level, you get short and you hold it until the momentum stops to the downside. Good. It's definitely a good trade. And that's a responsible trade because you actually have the market and a price on your side as opposed to just looking at a market stock and just hitting it because the market is going down. I mean, this is better because it's below an important price, right? That's a very, very effective trade in this market. I would actually even suggest that's a better trade than trading the spiders. And I actually think that's a better trade than getting short below 116.40.
You can see it in the chart. So it's just straight down.
Yeah. So.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they were producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.